Testing, testing. JB here, March 7th, 2022. Hope everybody's doing outstanding on this fine Monday. It's actually not a fine Monday, but we'll take it for what it is. Gonna talk really quick. I haven't been on the audio for a couple days, or at least a couple sessions. AVAV, I'll talk about BPT, a name I've traded many years ago. SCHN, Schnitzer Steel. I think that's how you pronounce it. As a play in the commod space as things go nuts. Other names, I sit here and I of course, I want to, I think the easiest, or at least the least path of resistance is to the downside. But then you start looking at some of the premiums and the puts, and the risk reward is it's tough because I think there's going to be bounces, and even if we do get a pull, I don't know that the put's going to pay. So I'm more apt to play some speculative calls. Similar to last week, I did square calls. Maybe I'll look at some other names in the cloud space. Ticker TAM, MDB, SPLK. SPLK had a nice activist stake last Friday, and that's on the heels of who is that? I forget the name of that fund, but they also have a billion stake in SPLK. So that's the name I'll be watching for upside. But really quick, so AVAV. So I got those calls before the earnings. You have to look at some of these names that might get a bid based on what's going on with the situation in Ukraine and Russia, and you have all these defense names that, I was looking last week. I was looking at some possible calls, but I'm like, these can't go much higher. AVAV was a great play because it's getting exposure from what's going on with. You take a look what some of the footage, and I try not to watch too much footage, but a lot of it you see drones, and drones have been front and center. If you go to Google Trends, the drone search feature has experienced quite a bit of an uptrend. I'll see if I can get the. Let's see if I have it up here. But some of the things I look at in regards to trying to do. Let's see if I can get it up here. Oh, some metrics. Let's see. Google Trends. So some of the situation, or at least some of the concern with, let's see if I can, I'm trying to do a couple things at once here. So let's see if I can do that. Yeah. So some of the concern with AVAV is it's a highly shorted name. There's, I don't know if it was one or two people came out with a bear piece on it. So every time it seems to look like it's going to head higher, people come out and I don't know if they shorted or let's see if I can get it on here. Here we go. You're a dime. So every time it looks like it's going to get footing, the stock sells off. And I think some of these short people who've been short the name, of course, very happy about where it went. I think it went under $60 a couple weeks ago, but now it's, I think if the market's starting to look out into the future, and the future is that a lot of these countries in the EU, even the US, are going to increase their defense spending based on what's going on here. You look at the future of warfare, and warfare, unmanned vehicles, right? Unmanned drones, maybe unmanned tanks. Who knows what that all looks like? But AVAV is front and center. So some of the concern, or at least some of the AVAV is down here. A lot of it, of course, is the overall market selling off. But AVAV reported substantially lower revenue guidance last fall because of the logistical concerns, supply, chips, all these other factors that weighed in. So some of the reason it's down, or was down in the 50s and 60s, was because of that. But now it's starting to reverse course. Earnings came in line. They reaffirmed their guidance. And then I think you start looking in the future, people are going to look to AVAV as for more drones, so whether it be Germany or what have you. So I think that's some of the reason it's spiking here today, and I think it's going to continue to head higher. So still have a couple of the 80 strikes left. I was looking at the 90s and 95s for, I think it was April. Let's see what. But of course, those kind of ran away from me, so I'll just hold on to what I have. It's a volatile name, so I hope it doesn't go back into the 75, 76 range tomorrow, but it's a possibility. But I'll continue to hold the calls. 95s on April. The 90 strikes are up 140%. So Probably in hindsight, I put it on a watch list. I was waiting for a break and hold over that 74.75 handle. Probably should have got the calls then, but what are you going to do? So that's AVAV. BPT, surprising considering what happened with oil overnight. Tapped 130. We haven't seen oil hit 130 since 2008. And BPT is a trust, so it gets paid out. I don't know if it's a certain amount of barrel per oil gets paid out to shareholders, and that has been scaling up. So back in 2000, I think it was 2012, 2013, I used to trade BPT and had a huge dividend. The stock was trading over $100. It was like $1.20, $1.50 per share. Divvy every quarter. And what happened in 2020, of course, 2019, oil prices, the oil futures went negative. BPT dividend is based on the price of oil. So it scales up. So it was $40. Maybe it's 2018 was 40, 2019 was 50, 2020 was 60, and now in 2022 is $66. So everybody, not everybody, but if you're an investor in BPT, you said, well, barrel oil is probably going to be around here. They're going to terminate the trust. It's going to go bye-bye. But then oil started to spike. It was $70, now 75, and then 90. Then it was 110, then it was 130 overnight. So as long as it stays over this 66 threshold, well, probably more. It's got to be 70, $75 or so. BPT is going to pay a dividend. So they paid a 50-cent dividend last quarter. If it stays up here, it's going to be $1, $1.50. If it stays over $100, $510, it's going to be substantially more than that. So they also put in their recent filing, they were set to possibly terminate the trust in 2021. Now they think it's going to go out to at least 2023, 2024. So those are some of the things I kind of factor in to getting some calls on the name. I thought maybe it's a great hedge if there is continued uncertainty in regards to what's going on in Ukraine and Russia, uncertainty with what's going on with oil. I think it's a great hedge. So I'll continue to look to play that. I put it on the watch list. I may look for some April strikes because those have come down. I'm riding freebie March 15s. Let's see if I have it up here. I mean, April 20 is only 30 by 45. So if BPT goes parabolic, it's probably not out of the craziness thought process to think that it doesn't go over $20. So maybe tomorrow or Wednesday I'll look to play some calls into April on BPT, and I'll continue to hold my March strike. So that's kind of my thought process on BPT. Just an interesting story. Back in the day, I used to read articles on Seeking Alpha. Maybe it was like 2015 on BPT. They thought where BPT gets their oil from, it was going to dry out. It's up in Alaska, and here it is. Many years later, still I think it's 66 million barrels of oil that they're still producing per. I don't know if it's per quarter, per month, but anyway, it's substantial. So I don't think it's going anywhere. The third one, let's see here. CVGW. Schnitzer seal. Tough to pronounce. I think of Wiener Schnitzels, and that's how I try to pronounce it. Anyway, so you take a look at what's happened in the commodity space. I think UPB had pointed out at the end of 2007 into 2008, you had the huge spike in oil. Oil went up to $130 plus dollars per barrel in the summer of 2008, and that kind of preceded the huge recession that we had. At the same time, commodities, the ag space was going nuts. Mosaic, Potash, NTR, CF Industries, all those fertilizer names went nuts as well. CF, what was it? Well, CF before it had an acquisition. I think CF acquired AJU, Agrium, I think was the ticker. Back in the day, that went up to $300. Mosaic went to $130, $140. NTR, I didn't really follow NTR back then, but I guess the summary of what I mean is that I hope the recent run up in the commodities is not setting up for what happened in 2008 where we have some type of recession. So Uh, my thought in getting ticker SCHN, Schnitzel Steel, I'll call it Schnitzel, it's easier to pronounce, is in the whole bump up in the commodity space. So take a look at US Steel, ticker X, FCX, all these, Alcoa, AA, these names have all just went on a tear, especially the last week or so, as people start to realize that the uncertainty of what's going on in Russia is going to weigh on all these other commodities, whether it's aluminum or whether it's going to be oil. So I think that bodes well for Schnitzer Steel. Some of their businesses recycling, so they take scrap metal, they recycle it, they do aluminum as well, and I think it kind of flies under the radar. So I thought that was a great way to kind of, I wouldn't say a hedge on commodities spiking, but I think it's a great play, and I think it's going to head over $60 before March expiration. I may look for some other strikes to play for upside, but that was kind of my thought process there. They reported earnings at the start of January. It was kind of, they missed estimates, the stock sold off, and then it's just been bouncing with the rest of the other commodity names. But I don't know if I'll add today. Probably, maybe next week, depending on where it is, and I'll look to play some other strikes for upside. Some other names on the watch list, Pool. So Pool has a investor day tomorrow at 11 o'clock. A great name. So you take a look at a company that benefited from COVID. People are trying to reinvent their backyards and their homes to kind of be a vacation without going on vacation. The good thing with Pool takes advantage of that, because not only do they install, the vacation place in the customer's home, the consumer's home, they also take advantage of recurring revenues, maintenance, taking care of the pool, closing it, opening it, things like that. So the more customers that they acquire, the more recurring revenue that they're going to get. So it's great. I'm not saying it's a Gillette razor kind of situation where you get them the razor and then they just keep buying replacement razors, but it's similar. And back, I don't know, it was 2 years ago when I was looking at it, was $200. Missed a lot of the run, of course, but I think there's possibly an opportunity to play for some upside, especially coming into the spring season. They're going to start opening some pools, and then you go into summer and people are going to be looking to get pools done. So certainly a name I'll be watching today, and hopefully before 11 o'clock tomorrow I may look to nibble some calls. Surprised here on CMG. I keep looking to kind of trade out for upside, and it's almost like CMG is like a proxy for this risk-off environment. People are just going to sell off whatever's up quite a bit, and CMG certainly is up quite a bit over the last couple of years. So I think that's mostly the rationale behind why it's selling off over 7% today. But yeah, crazy stuff. I don't even want to mention it, but Loco reports earnings this week. At some point that one, you have to think they've been such negatively impacted by COVID, and where they're located on the West Coast, where there were such more serious restrictions in regards to dining, indoor dining, outdoor dining, all that stuff. I probably, I've over the last couple years, I've watched a lot of my options expire on Loco, so I'm a little worried to try and trade some lotto calls into earnings. I think they report Wednesday. I think it's Wednesday, so I'll probably pass on that one. But just surprising, yeah. Maybe Chipotle is selling off because the Domino's Pizza fiasco with their earnings. Tough to tell. But anyway, certainly a name I'm watching for upside. You take a look at some of the names that are positioned well in regards to cash, huge cash flow, no debt, and someone posted on Twitter asking about Apple and why it's holding up so well. You look at Apple. It's a cash cow, right? So in a rising rate environment, people are looking at names that have high debt, need to raise capital possibly to scale out operations. Usually those are in the tech and cloud space. So that's why you see a lot of these names sell off, trade at huge multiples, because people are factoring in 5-10 years of monster growth. But then when rates start to rise, it costs a heck of a lot more money to raise capital. And people, when it's a high multiple name, any little dink in the earnings is weighs quite a bit more than on a name like Apple. So interesting stuff. And I'm not saying I'm going to get calls on Apple, but it just kind of shows you, how this market is trying to price in what's going to happen in the coming months with Powell and the Fed and all that fun stuff. I think that's it. It's 2 o'clock here. I don't know if I'll get back on the audio today, but tomorrow I'll definitely, if I don't add calls on some CVGW or what do we have over here? Oh, Loco, I'll definitely update that tomorrow. I think that's it, folks. I'm trying to think of some other things. Definitely some parallels. If not going to sit here and say, hey, we're in the midst of the biggest, the Great Recession that we had in 2008, 2009 with the housing bubble. But in regards to commodity prices just going nuts, definitely some parallels to be made there. But I think things are different. It's not, people aren't using weird instruments to, make money that are going to unravel and all that other stuff that happened in 2008, 2009. But if this, if oil prices continue to rise, with inflation concerns, the only way kind of out of it is if demand, right? Demand destruction. That's probably the best way to alleviate what's going on with oil prices. If we can't catch up in regards to supply, there has to be some kind of mix with that, and that means demand destruction. And same with consumers, right? If consumers' prices go up, the only way price is going to go, at least alleviate some of the inflation situation, is demand's got to get destroyed. So, and when demand gets destroyed, that means it's going to be a recession. We had the micro recession, I guess they call it, in 2020 with COVID. Before that was 2008, 2009, then the tech bubble. So those things happen. I think it's a different environment in regards to, growth. If there was a slight recession, I think it would be it would be short, and then we head up from there. Buying opportunity, buy the dip. All right, I'll try and get back on the audio probably tomorrow. Let's have a great day. Rock and roll.